Happy Thursday, guys. Happy Thursday. Next week, the Fed's meeting. It'll be a big week. Should be cutting a quarter, is my guess. There's been debate whether they should do 0.5% or 20.25, 25 basis points. So I'm going to show you why I think it's a quarter, and it's coming. So we'll see. One way or the other, we're getting a cut next week in rates, and the Fed will be cutting rates next week. So here's what's happening right now in mortgages. We're down in the low sixes, according to Mortgage News Daily. So 6.11, remember that it does typically have some form of a point on it. It's usually about 0.8-ish, give or take. Here is a chart of the mortgage-backed securities. Guys, green is good. Look at that trend from July. My goodness, isn't that wonderful and pretty and beautiful? Just kind of up. Now, remember, guys, things don't always happen in a straight line. So we've had a good run. I hope the trend continues. The trend's our friend. You guys can see the bottom two little wavy lines there at the bottom. When you see it that high above that little green horizontal line at the bottom, it means that you're typically in a like super excited, almost an overbought stage. So a lot of times you expect to see maybe a pullback. So who knows? The good news is we got the 25 moving day average, obviously is a little support, but that's usually pretty weak. But I'd like to think with the Fed doing what they do, if they cut 25, I suspect we'll be going probably sideways. I don't know what would happen at 50. We'll see. We'll see if we get there, but I don't think we will. Here's why. Consumer Price Index, CPI, that is one of the two big measures of inflation. PCE is the other one. But CPI came out yesterday, Wednesday, and it basically came out a little hotter than expected, but it's only for two reasons: shelter and motor vehicle insurance. We've talked about this many, many times. We've exhausted this topic, but if you look at the very bottom line, if you strip out those other two things, the shelter and the motor vehicle insurance, everything else is like flat, like zero inflation. But because shelter did come in hotter than expected, because motor vehicle is also, it's coming down, but it's still high. For that reason, I think they're going to cut 25 basis points and not 50. Because remember, the Fed can't change motor vehicle insurance. They can't really influence that, right? Cars are getting more expensive with all the cameras and stuff. So it just is what it is. So at this point, I think they're going to do a quarter. However, supposedly there's like an 86% of the folks out there, whoever these folks are, but the voting members, think there's still going to be a total of 100 basis points cut. That's 1%, 1 point by the end of the year. So there's only 3 meetings left. So if they don't do it next week, that means at some point this year, the majority of the market thinks that there'll be a 50 basis point cut coming, or a half-point rate. Again, I'm going to be on the bandwagon. That is probably going to be 25, 25, and 25. We shall see. Time will tell. That's my crystal ball. Interestingly enough, guys, I should say interestingly enough, we're going to hit a little bit on renters today. And give you some good facts and stats about that. But ultimately, credit card debt is reaching an all-time high. It has been for a long time now, for many, many, many months, if not a year. It's at $1.14 trillion. We get that. And the benefit here, the point to make is that homeowners, if you bought a home, you're loving life. Even if it was last year when rates are at 8%, you're loving it because prices keep going up. And these poor renters, they keep having their rents go up, but no equity that goes with it. It's actually rents have almost doubled since 2019. So as far as the hiring, pardon me, the economic and the housing market, they've, like we just talked about, you kind of see where rates, not rates, but unemployment has come and gone. It's right now at 4.2. So that means for the most part, people are still employed. I mean, that's really low historically. You guys can see this. So if the unemployment rate's 4.2, that means people can still buy homes, right? So these renters that are out there, check this out. The lifetime cost of renting is about 333 grand, 25 grand a year. So the joke is always, if you're going to pay somebody's mortgage, you might as well pay your own, right? So if you know somebody renting, really, really, really encourage them to start looking around. We've been saying this because the average homeowner, by the way, has a net worth 40x bigger than the average renter. So 40x. And again, a lot of that's the appreciation, which we're about to talk about here in a second, and things of that nature, and obviously paying out a mortgage, you get some write-offs, all that stuff. So here's the second part, where rent prices rose for 37 consecutive months. So for 3 years, they rose, and they went from 1,600 to about, call it just under 2 grand on average. And you guys can see the states. Hawaii wins, right, with a cost of close to 600 grand for renting. Colorado, who knew, right? Colorado's no bueno, but there's Texas way down, not even on the list over there in the top 14. Relatively inexpensive, so that's good for our renters here. But when you think about it, again, 30 to the average American, about, I think they said 30% of income, it goes towards rent, which used to be about 25%. So as rates do fall, as they have been falling, as they continue to go down and get lower. We've talked about this again many times over. When there's a 5 in front of rates, people are that's the catalyst to get buyers to move, right? Whether you're an existing homeowner or a renter, 42% of buyers 42% of buyers say they're going to jump back in as if they're not out there right now. Jump back in with a rate around 5%. Now, I have a feeling 5.x, right? I don't care if it's 5.99. I feel like the 5 anything is going to trigger a lot of those folks to get off the fence. So think about this. Again, if somebody's trying to buy, this is a great time to do it. And I'm not telling you to go buy just because, but if you're in the market, this is a good time to get a little more serious. Our real estate report card. Last week we did Parker County. This week we're doing Collin County, which is North Texas, as Plano, Frisco, and things like that. So if you're not familiar with the area, it's interesting. These initially, some of these stats I thought were off, but it makes sense because while Plano and Frisco are certainly well-to-do, communities just nationwide, Collin County is really big, so it encompasses a lot of other cities where prices and things like that may fluctuate, just being more on the outskirts. But here's what I found interesting. For the last 5 years, it's averaged about a 10% appreciation. Now, that's only 2% per year, 2.02. I thought that was a little low, but I guess when you figure in the last year or two, if someone's out there, not in the immediate, hub of Collin County, then I can understand that maybe the appreciation has been slower. So that's interesting. But I will say on the far right, the 5-year trend, 10-year trend on average are both north of 7%. That's crazy. The average median, or I shouldn't say the average, the median price, like the house in the middle, is about $540,000. I beg your pardon, 540, which is crazy. As far as inventory and things of that nature, we're double what we had last year in terms of active listings right now. That's a good thing, believe it or not, because again, housing is tight. The average income, this is up from the stat I last saw for Collin County, is $123,000. That is more than double the national average. So people in Collin County are killing it. And if you look at the 110 over there, the black circle, that means the earnings, the median income, they can afford the median home price. So anything above 100 says that we are more than the median people can buy. And there are 9% of renters who can afford to purchase in Collin County. So that's 110,000 people. So interesting in my book. You may be bored and you already turned this off, but I think this is really cool. All right. So for some fun, some clown is trying to sue because he didn't realize he was, I guess, Leo is his name. Is trying to sue his real estate agent because they didn't disclose that it was Jeff Bezos buying the house. And so he's like, well, if he could afford it, he should have paid more. Dude, you negotiated. Doesn't matter who's buying your house. He negotiated. And it was a $79 million home. Big freaking deal. Boo-hoo. That's my opinion. The guy was saying right here, I'd tell him that too. Probably a little nicer, but I'd still tell him. This dude, and this is an old article. I have no idea how it popped up, but in 2004, somebody went in and gambled their entire life savings, like sold their house, sold their clothes, sold their car, just went in and literally doubled his life savings from 135 grand to 270. That's just mad shout out. It might act so, good for them. I don't know why this came up, but I just thought I'd share that. And here you go. Lastly, we'll see. I think the next slide's it. The world's oldest whale. I don't know if it's the world's oldest whale. That's hard for them to know if it's truly the world's oldest whale, but they did find a 100-year-old harpoon in the side of a whale in Alaska. Can you imagine? I don't know how they know that the harpoon's 100 years old. Maybe it said like made in this date. Who knows? But anyway, I just thought that was really cool. And then lastly, that was our last slide. So the meme of the week, top 10 commandments of buying a home. While this is meant to be funny, if you are in the market or if you ever do a mortgage, please read them. They're actually real. It's meant to be funny, but don't go buy the new car. Don't change your jobs. Don't put a whole bunch of cash that's in a briefcase into your bank account all of a sudden. So all those things, let's not do them. But I'll leave that up here for half more second so you can push pause and look at it. These are things you should not do when buying a home. So guys, as always, please share, subscribe, like, all that fun stuff. You guys know what to do. We appreciate you as always. It is a Thursday afternoon, so enjoy the rest of your week and call us if you need us.